interesting comments coming in from the two big voices in the US markets. But Sajid, on one hand, we actually see President Donald Trump once again saying that the stock market is doing better than it's ever done. And it's Powell highlighting that it's fairly highly valued at this point in time. Seems like that just yesterday markets were giving a little bit more weightage to Powell's commentary. But what does it really mean for the market?
That's right. If you look at Powell, he didn't give any hint on what's going to come up with respect to rate cut in October, and that's something which was disappointing for the market, because the market was looking at his commentary from a rate cut point of view and the trajectory. If you remember, in the last Fed policy, it was a risk management rate cut, which was in which Powell had announced, and the market thought that that was a hawkish commentary coming in from the Fed chair, and that did not augur well for the market as well. So this first economic commentary which Powell has come out with does not give any hint with respect to the direction of rate cuts going forward, though the street continues to maintain two more rate cuts in this calendar year, and maybe going into another rate cut in the next calendar year, which will be there. So that's something which is there, and that's the reason why we saw the US market cooling off yesterday after all-time highs. Trump is talking about the markets being high, but the market has been driven by the tech stocks. The Max 7 has been driving up the S&P 500 at two all-time highs, and there too you saw some bit of cooling happening. After the Fed chair talking about the fairly high valuation which the markets are looking at, because the markets, from his point of view, the markets are ignoring the inflation risk which is still there because of the tariffs, and the weak labor data which is pointing to a slower, sluggish growth for the economy.
Well, yes, some of the concerns with respect to inflation as well as job data has been highlighted. And just to tell you that it was the US markets that actually reversed the course, as S&P 500 declined almost 0.6%, Nasdaq almost a 1% decline. Like just Ajit told, that it was the tech-heavy companies that were seen to be declining, from the likes of Nvidia, Apple and Amazon. They were actually down, and even Dow Jones at one point in time it was up almost 300 points, but ended the day with 88 points of cut. So lots been happening in the US markets. But Sajid, back home, interesting setup, because just yesterday, though the Nifty was in the red, Bank Nifty, what a stellar move from the day's lowest point. Help us understand, how is the setup looking like for today?
It's if you look at the GIFT Nifty, it's not it's not positive in that sense. It's going to be a muted trading day for the GIFT Nifty and for the Nifty going forward. We spoke about it yesterday that 25,200, there is some put writing there, but that's a very weak support, and that's what we saw. By the end of the day, we saw the Nifty go below 25,200, and because it was an expiry day as well, there has been a lot of closures of the contracts, and the market is relatively on a lighter note in that sense, because from a shorts point of view, but the support levels are not enough there. The momentum is not in favor of taking the markets higher, and if you look at levels like 25,300 and 400, where we have seen some kind of call writing happening, that's showing up as a resistance for the market there. Foreign investors were net sellers yesterday. 3,500 crores net sell. There is DIIs at 2,600 crores net sell, which was there. There has been some kind of activity which is with private banks. If you look at the delivery stats of private banks, that gives you a good indication of where the activity was. Axis was having a total delivery turnover of 1,400 crores, followed by HDFC, ICICI Bank and Kotak. So these four private banks were some of the more active ones, where we've seen some buying happening. And if you compare it to what's happening in the Nifty bank futures, they've been adding long positions there as well, with respect to the the 514 crores of long positions that came in Nifty bank. That gives you an indication that what kind of buying was there, but there has been equally amount of selling which happened, as that's the reason why we've seen. We've been talking to a lot of people in JP Morgan, and they've been telling us very clearly that this market is holding up because of entirely a DI-led flow which is there. And from a foreigner's point of view, it's going to be wait and watch, because they want that one trigger for them to bring back the momentum trade into the market. This market lacks a momentum trade, and that's something which the foreigners wanted. So yesterday we were talking to Rajiv Batra of JP Morgan, and he said very clearly that even if 1 month of fast moving indicators come in favor of the growth coming back, the earnings coming back, there will be a rush of money which will come into the Indian market from overseas, and that's what foreigners are waiting and watching, because with the GST cuts coming in, consumption now beginning, if the data which is expected by the first week of October, especially with respect to the outlook of the previous quarter and the next quarter, there could be some bit of improvement in the way the foreigners are going to invest in this market.
Well, yes, for the past 2 days, we have been hearing out the major commentary coming in at the JP Morgan conference, and even Rajiv Batra highlighting that if things